You have questions, we have answers. This is Jane Muller.
And this is Ken Muller. Welcome to our show, all about real estate with Ken and Jane. So this show, Jane, we're going to talk about options and strategies for homeowners when they're buying their next home. You always have the issue of what to do with your current home, how to handle it, whether to put it on the market, to sell it, to rent it, to keep it. There's a lot of, if there's a lot of contingencies involved, and it all depends. A lot of times it depends on the homeowner's financial situation, their, the economics. So we're going to break that all down and talk about different ideas and strategies that homeowners can use to make that process, the home selling and the transition process, as smooth as possible. So obviously, I guess the first scenario would be if the homeowner is fortunate enough to have enough sufficient cash funds where they can buy their second home without having to worry about doing anything with their current home. Then you have the luxury of buying your home wherever it's going to be, and then you can make your move, and then you can, decide whether you want to sell your current home or to rent your current home.
Yes, Ken. I mean, I often get calls from the owner and say, Jane, what am I going to do? Right? I mean, I'm going to retire. I'm going to move close to our children, or now I'm totally remote. I want to be down the beach, whatever the reason is, right? They always ask me, what should I do? Okay, what options do I have? What strategy should I have regarding to the finance of the next home? So I always say to them, if you have the money to buy a next home, just focusing on find your next home, because it's still seller's market. Selling your home is easier, much easier, because that's my responsibility. Absolutely, I can help to set up strategy and market plan, get our home sold.
But then a question might be, or one of the natural questions might be for those homeowners would be, well, do I move into my the new home and leave the home vacant, or do I keep it fully furnished? A lot of homeowners have that approach you with that question.
Yes,
they get into the details of how's best to present their current home. Do they can they afford to just take their furniture and move it if they need it for their new home, or if they don't, then should they keep it? Should they sell it vacant, or does it look better if it's already pre-staged with the seller's ideas and plans for how they think the layout would situate itself best?
Ken, and this is a very good, very common questions I get. So I always tell the owner, if you are fortunate, can buy next home without worry about the finance part, buy another home. Once you're secure another home, do the home inspection. Once your home inspection finish, from your heart, you're definitely going to go ahead with it, because at that point, if the home inspection is done, you're satisfied with the home condition, so you have no problem with your finance, right? Cash financed position to purchase, obviously you have no issue. So at that time would be best time for us to put our house on the market. As far as you want to be vacant, not vacant, I mean, it all depends on each home are different. Most of the home, we can help the owner to use their own furniture, just move few things around, make it look really beautiful for the photo. And once the photo is done, either you move or you sell some furniture, give away. That's not going to affect your home, because a lot of buyers, they won't see a few homes when they come back. They may not remember which house. So when I used to be buyer agent, Ken, I used to give a nickname, Mickey Mouse house, dog house, you have a dog there. So to help buyer to remember which house we've been through, right? And they always go back to the picture. Once again, we did a few shows in the past talk about how important what we prepare for the picture. That's most important, because they're going to go back to look at the pictures. So as long as the picture is great, so I don't think that's vital whether you should empty or not empty.
You look more at I think most buyers are very sophisticated. They look at the layout of the house.
Yes.
The floor plan is the most important. The
floor
location.
Plan.
Yeah,
exactly.
So they can imaginate or use their imagination to create their furniture. Everybody has different personal preferences too.
And also in the past, what we did is some home, by the time we got a key, they already completely moved out, or brand new construction. And you can either do that, take a picture of that beautiful space doing that, or we can visually stage the home with a
virtually.
Yeah, virtually to address that. So that's not an issue. For today's show purpose, let's talk about the finance side of the options they available, because I did had a few clients had a difficulty, so I just want to share their experience and so people can hear and to avoid the same problem. I mean, when you hear something happened, if you can correct it, better than make your own mistake and treat it as a learning curve, right?
All right. So part one is cash is king. If you have the cash, God bless you. You don't need any help with anything because you can just go ahead and buy that your new home without worrying about anything.
Which is you give a very good point. If you bought a new construction or existing home, wouldn't put your house on the market, that's a flexible.
That's the only thing, right? The timing. Then you have to know when your new construction home will be ready, when they'll have the CO, so you can occupy it, and then it becomes a timing of how soon or how late you wait till you put your home on the market. So that's really the only thing for a cash. A seller that has the cash, they just need to know, they need to consult with the real estate professional as to the best guesstimate as to when to put your current home on the market.
Exactly.
You don't need the cash from it. That's the only thing.
That's the best position. Yeah. But unfortunately, most people cannot do that. Unfortunately.
Right. Yeah. So the second option would be if you need to finance your second home, the first thing you should do is consult with your mortgage broker to see if you can qualify to obtain the mortgage on your new home without the need to first sell your current home. That's a very, very important point. A lot of times, list agents, they screen buyers when the buyer says they have a current home but they don't need to sell it, and they present a pre-approval letter from their broker. But it's very, very sometimes they're very vague and it's not clear. So the list agent really's job is to make 110% sure that the buyer does not need to sell their home to qualify for the mortgage based on the pre-approval terms stated therein. So
Ken, I mean, for us who in the business, you would think it's a common sense, right? If you want to buy a home, you don't have a cash, you have to get the mortgage pre-approval. You'll be surprised how many people actually just looking without a pre-approval. Because those people, try to get a second home. Maybe they bought their home a long time ago. Maybe they already forgot about the process. They think they can borrow X and Y. A lot of people, they think they had all the assets, so on and so forth. But when you talk to loan officer, you quickly realize that in today's market, the loan officer have to, based on the approval, not only on your asset, more important is your income stream. So they have to see whether your income can support your mortgage. Right. So that's why you have to really talk to a professional loan officer to see before you go shopping. Right. If you know you cannot buy a home with the cash, the first thing you should do is talk to a loan officer. You can go to the bank you normally bank with, or you can ask, where you want to go. You can ask the local agent to suggest some lenders, because I do have clients ask me, do I know lenders? But if they buy in New Hampshire, if they buy in Florida, not all the lenders in New Jersey carrying that state license. So the best thing is to find a local lender and to see. But if you borrow from the big bank, I'm sure they probably have branches down there. Right. They can do that.
But their analysis will be whether the buyer can carry two household expenses, really, because then you'd be carrying your current, assuming you have a current mortgage, you'd be carrying the mortgage on the current home you reside in, and then also being able to also afford to pay for the mortgage on the home B that you tend to buy. And I think that's very analogous to a little bit of a sidebar when we evaluate rental applications where the tenant comes in with a cosigner, and the cosigner on paper might make a very good salary, let's say $150,000. But even in those cases, you have to look at the cosigner and you have to look at what their expenses are to see if the cosigner may have 4 kids and may have a mortgage on their current home. So you'll see that quickly that $150,000 gets consumed by expenses. So then you have to say, well, can the cosigner really besides paying their mortgage and all their expenses, they've got to then afford to pay the $3,000 a month in rent, and then you find then it becomes very tricky. So that's the same analysis that I'm sure that the loan officers utilize when they look at a buyer's debt to equity, and they see if there's enough. If the debt is too high with carrying two mortgages, then they definitely won't approve it.
Yeah, I mean, obviously, by contact the loan officer, you know your budget, so you can target, fine-tune your purchase. What are you looking for? So it's really heartbroken if you go somewhere, you fell in love with the house, and then you try to get a finance and realize you're not qualified. That would be very disappointing. So that's why we highly recommend you to go to a mortgage lender to get pre-approval. And however, often I get a question asked is more tricky from this one, right? They will say, Jane, I listened to you. I got a pre-approval, that's really just, recently happened to one of my clients. They get approval. They want to buy a house. The new home, the owner has to buy new construction. Their seller have to buy new construction, so won't be ready until 4 or 5 months down the track. So they in the contract. My client is still qualified. They got the pre-approval, and in the meantime, they under contract. They did home inspection all done, so they have to sit and tight wait for 4 or 5 months. So they said to me, Jane, I really don't want to miss this strong winter market. So can we put our house on the market? I said, sure, we can. But the buyer may want to close, within 60 days to protect their interest rate. So in that case, you may have to move somewhere. My client said, sure, no problem. See if we get the number I want, probably will work.
Because there could be a 2-month gap. Because if they have to wait, if your client who's a buyer has to wait for their home, the seller's moving out to be ready because the seller is moving to new construction, which could take 4 months, and your buyer's current house, their purchaser wants to close in 2 months.
Probably 60 days.
So it could be a tricky situation.
But that's not the point here. The point is, yes, we put on the market, we get a very strong buyer, and the close in 60 days, everything's beautiful. My clients got well above asking because it was in the winter time, so we got everything. And the point is, at the end, they got the cash. So, but they don't need a loan after all. Mm-hmm. But the thing is, but my client has been very honest with the loan officer to tell them from the day one. Because if you're thinking you need a loan to buy, but in case you buy new construction, your closing maybe 4 months, 6 months down the track, right? Be honest with your loan officer, because they could did all the work. If at the end of the day you don't want to close, at least you let them know, so they aware of that.
So in this situation, your client, the buyer, they sold their current home, but they had to
they didn't need the loan.
Relocate somewhere and wait and have temporary housing until they're new until the home that they're going to eventually purchase is vacated.
But they have the cash now, because at that time they didn't. When they try to buy that time, they hard to balance both of them back to back, sell and purchase.
Right.
So
a little bit of an inconvenience, but just have to move. But all right, why don't we pick that up? We're going to take a short break. We'll pick that up right after these messages. All right, welcome back. So, Jane, let's continue this story with your client. I'd like to know, I'm interested to hear, so they sold their home after 2 months, but the home that they were going to purchase, they have to wait another 2 months because that seller is buying new construction and so they can't vacate. So in this example, where did your buyer move to for temporary housing?
Yeah, they found some. Actually, there's a lot of places out there. They do month by month. They can do month by month.
Oh, and, I was thinking you meant there's relatives out there. They do month by month. If they don't get along with you after a month, they boot you out. And then
no, they could live in with their children. That's the reason they want to move closer to their children and grandchildren. But at the end,
an option
they didn't.
For people like that would be they could move somewhere and then put their belongings in temporary storage, and then when and just live on the minimum of things they need, and
Yeah.
and then wait when the house is ready, then move everything from the temporary storage into the new house.
Absolutely. I think the thing is like in this case we talk about finance options. That was truly the they didn't need the finance, but please let your loan officer know advance. And I had another story which is much more heartbroken, which is I represent the seller. So when they come to made an offer, I checked with the loan officer. They said that they have their house on the market, but they don't need to sell to purchase, which is fine. I checked. You don't need rent to purchase because your house on the market for sale. You're not thinking about rental. So I covered all. I did all my homework per se. They said nope. He has enough income. So on and so forth. It's like a golden client, no problem. So we about to clear to close. A few days before closing, I checked with the loan officer. I checked with the title company, the both lawyer, ready to go. We close. And then what happened was they want to delay the closing for a few days. I thought that was odd because the loan is clear to close. What happened was because they got a buyer, the buyer got a buyer on their house. They closed their house, and then they used that cash to purchase our listing. At the end of the day, they didn't need they did not need any finance. Yeah, but they did not tell the loan officer. So the loan officer until the end didn't know about it.
And what happened due to that?
Was nothing we can do as a leasing agent. They close the cash.
They close.
Because they want to delay the closing. We say no, but time of essence, still give you a few more days. But they close straight away, just like 2-3 days later.
It didn't affect the closing, but the point is that
the loan officer never notified, and that was like.
So it was a big miscommunication. Lack of communication and
I would say it's but loan officer never, at least you could do as a client to thank them, say I'm so sorry, but I got I got the cash, I got purchase, I figured out, just got by God mercy, we're okay, right? But at least talk to the loan officer. But in this case, the loan officer called me, asked me whether the loan, what's happening with the closing.
I said,
we closed.
They didn't close,
yeah.
Right.
So that's,
Let's talk about another option to, possible finance, which is cashing out some equity in your home or getting a home equity line of credit, right? That's another strategy that it might be a situation where the homeowner has maybe they have $300,000 in savings, and they figure, I don't have enough cash in Central Jersey to purchase anything that I want with $300,000. But if I can pull an additional couple $100,000 out of my house, through a home equity line of credit, maybe I could pull $400,000 or $500,000. Get let's say $400,000. I'd have $700,000, and then I could get the house of something that I want that's suitable
of my dream home.
Yeah. Well, I don't know, it would be, but at least something you could get something decent or whatever. So the question would be how if that could work, and then they don't have to be, and then let's say they don't want to be stressed with having to sell their home, and they know that in this competitive market that the chances of any seller waiting for the buyer to have a sales contingency on their home is they're going to typically lose in the competition with all these other more favorable purchase terms.
Yeah.
So how have you seen that work?
Yeah, Ken. Once again, the plan ahead is the key. Sometimes the client contact me a few years before they're ready to move, just get a house ready and just get decluttered, and they asking the options on what they should do moving to purchase another property. So at that point, I always tell them, talk to your loan officer and to see whether you can have line of credit on your home. But you have to make sure, because say, for example, if you're retired, even though you may have a lot of asset in your home. Say, for example, you bought a house 30, 40 years ago, you paid $200. Today, it will be easily $600,000, $700,000, $800,000 for that house, right? But it doesn't mean you can get refinance, because it really depends on your income, right? If you both retired and may not be able to service the loan, you may not get it. That's number one. Number two, you have to plan ahead.
Right.
Because there's another story, a heartbreaking story to one of my clients. They got a referral from the financial planner. So they trust this loan officer with no doubt, right? And can refinance their home so they can buy another house out of state. So they got their loan, they bought another house.
They were prudent. They took the advice. They got a home equity line of credit in place a year or two in advance.
Once again, that's not a year or two. That's the sad part. They got advice from the financial planner, and they got a loan officer, and then recommended, and they went ahead. The loan officer,
and they told the loan officer that they wanted.
That's what they wanted to do.
Home equity line of credit so that they could utilize the proceeds together with their savings,
and then they put a house on the market afterwards. And in this case, in my opinion, is the loan officer may not understood or may not be competent in the product that the company the loan officer told them no problem. They got a loan approved, no problem at all. So they purchased another property, which is but they didn't put a condition on that property subject to get them the refinance on these.
Right, because they figured they have the cash in their bank account, and then they can just take their home equity line of credit and write a check from that, and they probably and then together they have that is in essence cash, and then they can worry about paying back the loan of credit after they sell their current home. That's the plan they told their loan officer. Sure. That's the plan they told the buyer agent represent them out of the state. But unfortunately, heartbroken. The day they have to close the line of credit loan, they read the documents. They found in the documents, they said you need keep the facility for 1 year. So in this case, what they try to do is not going to be possible, because if you take the loan 1 year, that means your house cannot be on the market for another year, right? So or cannot be sold within another year. Right. So at the end, they have to, they try to negotiate with the lender, but they got declined, so the facility got canceled. So in a nutshell, there was a big learning curve for them. So they couldn't get a loan. And now they already end the contract with another cash purchase, which is, I mean. So the big lesson was you have to read the fine print of a home equity line of credit.
It's not only fine print. You have to make sure
your loan officer, you understand that the loan officer understands that your purpose is to use that money and then to close out the loan.
They did. But the thing is, loan officer didn't know their own product. I would say if you are listener out there, if you're getting your line of credit, if you want to do the short term like this client, you have to ask your loan officer, can I just get a line of credit and cancel within 3 months, 2 months? Most likely no, because think about it, the bank go through so much work to get you approved, right? And all the process is done. There's a upfront cost. But if you not going to use the facility and you're going to cancel within 2-3 months, it doesn't make sense for the lender to do so. So you do check with each individual lender's policy. Some may be a year, like in this instance. Some may be 6 months minimum. So you have to check, even though you think your loan officer know, but you have to make sure they get a clearance on that side.
And also on the payment terms, the question is, does the loan have to be in existence for at least a year, or from the time you draw the cash from it? Is there like maybe a prepayment penalty that you have to have once you make the initial withdrawal that you have to wait a certain time?
I think the facility is not the.
But these are just questions that you should raise with the loan officer, because it could be the situation where they say they've had the product, it's been sitting quietly for a year where they haven't drawn it, but once they draw it, that might trigger the timeline for the 1 year.
I think more likely the facility year, but you're right. Why not just confirm?
Be confirmed,
be
right?
Sure.
Because you could have people that have pulled it for like 1 or 2 years, and they said, okay, now I'm ready to use that because I want to purchase that home out of state, and I have my savings, and I have my home equity line of credit. But I intend to then sell my house within 2 to 3 months and then pay it back. So
you're absolutely right. You have to check once the 1 year or 6 months start. Is the day you sign your paperwork, right, start your facility, or is the time you
you first withdraw from it?
Yeah.
Right.
Mm-hmm.
Because then if you pay it back too quickly, then the bank's not getting any.
Yeah.
That's another theory. They're not getting much
That's right.
interest from it, and then
but you have to be very detailed and check. Not assume your loan officer is knowledgeable.
But it is a very good thing to have in place for peace of mind. So start early. We recommend everybody get a home equity line of credit, so you have it if you qualify for it. It's just good to have on a rainy day for whatever purpose might come up.
Absolutely. I mean, a lot of time, right? And plan ahead. If you know what you're going to do, plan ahead. Talk to the professional. That's the key.
Right. All right. So we're almost out of time in about a minute. Let's cover real quickly the last scenario. We have to sell first and then buy. That's called the back-to-back, the piggyback contingency.
Yeah, if you have to do that, that's fine. Just put a house on the market and sell. But once again, what we can do is we can negotiate with the buyer. We can have a longer closing, maybe 2 months, 3 months, or if the buyer has to close in 60 days, protect the interest rate, because lock rate is about 60 days max. So, or 90 days with paying some fees. So we can do is a user occupancy, which is up to 60 days, give you more time. Even though there's a risk, you may have to find a temporary renting or rent for a year or two, but at least you're moving the right direction to the home, the next home you want to have.
Mm-hmm. That's the least ideal situation, but unfortunately,
sometimes work out.
We work out the time. It does work out, right? And then because then the seller of the home is kind of married to the buyer's purchaser, so you have like a domino effect, and hopefully you have to then do a lot of research and make sure that the dominoes stop with the purchaser of the buyer, and then you really got to delve deeply into their transaction to find out not only your buyer's qualifications, but your buyer's purchaser's qualifications to make sure that everything, that the cards are going to line up.
Yes, absolutely.
All right, Jane, very good. We're out of time. We'll see everyone next week. Enjoy your weekend.
Thank you.